right, welcome everybody to Wall Street Reporter's next Super Stock live stream, where we bring you those stocks which have that 10x to 100x upside potential. Companies going after massive multi-billion-dollar market opportunities that are at a key inflection point, have multiple catalysts in place. And today we are back with, I think, the hottest stock in the AI space in the last 2 weeks for sure, Siyata Mobie, SYTA on NASDAQ, and the CEO of Core Gaming, which is merging with Siyata, and that which has been really the driver for the stock. And Eitan, welcome back to the program.
Thanks very much. Good to be here.
So Eitan, I think the first time we had you on, which was about 2 weeks ago, the stock was, I don't know, $1.30, and it rocketed to $9 after hours trading in like a week. People are, I think what's happening is people are figuring out the investment thesis we discussed, which is, we'll get into, but why Siyata should be trading at potentially at $15 to $25, based on, again, you're doing $80 million in the mobile gaming space. The market is paying, 25 times revenues with, stocks like App. And, again, the merger is happening. Siyata shareholders are going to have 10% of the company, at least of the combined company. And, again, based on all those numbers, the stock, it works out to like at minimum 15, possibly 25 a share, depending on a couple of things. So people are figuring it out. The stock has moved. Obviously, it pulls back, as always, every time we introduce a stock that, that becomes one of our 10 baggers, it always pulls back after the first breakout. They always pull back, 50%. Everybody gives up. And then that's when the real move happens, after everybody, throws in the towel, which is right now. So with that said, Eitan, welcome back. We got a lot of new people here in the audience. So can you maybe start off by telling us what exactly is Core Gaming, doing inside this $126 billion mobile gaming market?
Yeah, I'd be happy to start with an overview of Core Gaming, our company, our business model. So essentially, Core Gaming, we're an international mobile game developer and publisher. We create entertaining games for millions of players worldwide. We've launched over 2,100 games into market, and those have been developed and co-developed with other gaming companies. And to date, we've been across our gaming portfolio. We've engaged in over 40 million players, and we operate in over 140 countries. Lifetime downloads across our games have been over 780 million. And we've just seen consistent growth and excitement over the games that we launch. We're constantly iterating, getting new innovative games out there that have a stickiness to them. I see you pulled one up over here just as an example.
Yeah.
And so these are really the type of games that we focus on. These are what are called casual mobile games. They're really games that anybody can play. It's designed for that. They have simple rules, shorter sessions, not really much barrier to entry. And these are really games that, people download on the fly, but they have this stickiness to them and they're fun to play with. And so, usually people are looking for those free games, something that they can kind of, try out and see if they enjoy. And so these are the type of games, as you put up here, that our users download from our portfolio.
Okay. No, it's very exciting. So basically, again, I think so the reason, again, the market's excited because, as I mentioned earlier, is the market loves the mobile gaming space, right? App 11, APP is the symbol. They're trading, I think, still at 25 times revenues. They're doing $5 billion in revenues, trading at 130 billion dollar valuation right now. I think this was what we were talking right before we started, and you mentioned it. I think the stock went up 700% last year.
APP is, as you mentioned, App 11, which is one of our competitors, of course, a company that does very similar things to what we do at larger scale, but actually also one of our partners. So we have a partnership with them whereby we are one of their publishing partners. We distribute their ad inventory through our games. But yeah, they were the top performer in NASDAQ in 24. Had a nice run, and they definitely have some exciting things in their pipeline. I think they just announced recently actually that they are selling their gaming portfolio. I think for $900 million. But they are very much an ad tech platform in the mobile gaming space, and have a lot of relevance to what we do.
Okay. And what's interesting is, again, you said they went up 7x, 700% last year, and Siyata went up 700% in the last 10 days, which shows you. I think the market sees what kind of potential the market sees in core gaming once this merger is completed, which I think we're expecting. Are we still on track for what is it? Within the next 60 days, so maybe at the end of June, possibly?
Yeah, so let me just maybe speak maybe for the whoever's listening out there that wasn't on the first interview. Let me just speak a little bit about this merger as well as the timelines. This merger was a strategy for core gaming to basically facilitate a public listing for our company. We feel very strongly that we have a good place for core gaming in the public markets. And as you mentioned, APPs are comparable. There are a number of other gaming companies out there, but we're not a pure gaming company. In contrast to some of the other gaming companies out there that have gaming brands, we are very much focused on developing games, launching them through our proprietary platform, and also working with other gaming publishers and gaming ad tech companies to monetize our games. And so we kind of fit into a number of different industries, both AI and ad tech, as well as gaming. And we think that sets us apart and gives us exposure to a few different sectors, which is exciting. The merger with Siyata was, the culmination of a long search in the right fit for a merger, for us to facilitate a public listing. And we saw Siyata as a very good partner. Siyata has a mobile business, not a gaming business, but a mobile business. And so there's some relevance in that particular space. But more than anything, we saw this as a strong partnership going forward. And, Siyata being able to leverage our larger business to be able to run with the public company, and for us being able to plug into an existing shareholder base that's excited and engaged and looking to get reinvigorated, with a strong story for gaming.
We're seeing it. Yeah, no, it's definitely. Listen, your instincts about this as it's absolutely right on. We're seeing it in the market. I mean, the market has spoken, right? I'm very excited. Again, we traded $1 billion worth of stock last Monday, right? Over 100 million shares at $8 or so, which is crazy, right? So, and I think we're just in the early stages. So you mentioned Siyata Mobile is beyond just a company in the mobile space. Really, you're at the intersection of really the hottest themes right now in technology. You got the ad tech space, you got AI, you got mobile, you got all these things converging together, and core gaming is right at the intersection of those. So okay, so we got the merger is on track. So again, I think people are asking, what is the date that we can expect? Is it still like at the end of June? Like, again, nothing is definitive 100%. These things are always whatever. It could be faster.
Yeah, that's certainly our target. We're very much at the mercy of the regulators, meaning this is a process that has to, that we're going through, and obviously we're working with them closely to facilitate that process as quickly as possible. But yeah, it is a regulatory driven process. We don't want to peg a particular date, but our estimation is that hopefully we get this done inside this quarter. Just to speak a little bit more about the merger you mentioned before, about the 90-10 split. So Core Gaming has a third-party valuation of 160 million that Siyata actually facilitated, and a fairness opinion to that effect. And the agreement that we have with Siyata is a 90-10 split. So meaning the Siyata shareholders will get at minimum $16 million of value. Now, when we first had the interview, There was even upside for anybody who had an entry point at that place because, given where the market cap was. Since then, obviously, there's been a lot of excitement, about the company, and we see that in the market. So actually, that 90-10 split could end up being much greater. As it stands right now, it's closer to an 80-20 split. So ultimately we'll have to see where things net out, at the time of closing, but that's kind of the structure that we facilitated. And in terms of the potential here, as you laid out very nicely, Jack, I think, we always take the approach of staying head down, focused on business execution and really the long-term vision. Obviously, there is always excitement around, the stock when it's moving, when there's a lot of liquidity being generated. You mentioned $1 billion in trading. We shouldn't discount that. I think that's a reflection of the business potential here. But our vision and capabilities really are on business execution, which I'm happy to speak about further about our strategy for core gaming. And we think there's a lot more upside and runway, given what we have in store for core gaming and the growth of our company.
Yeah, so I want to get to that next. First, I just want to clarify. So right now, basically, Siyata shareholders, originally it was supposed to be 10% of the combined entity, right? Now, when you said $160 million valuation, that's basically, just to clarify, that is, as a private company, that's not as a public company. That's an outside opinion. The reality, the real valuation is the comps that we see in the public space, public markets, which is 10 times revenues, even 25 times revenues in the case of app. But we want to be conservative. I don't think the stock is going to trade at 25 times revenues unless you really, deliver some upside surprises, which we don't know about. Then, the market can start extrapolating and it can go absolute bananas. But even at 10 times revenues, this is 800 million. So Siyata is 10% of that 80 million. But now essentially there is a path for Siyata to have 20%, right? I think based on where the stock is at the time of close. So potentially the numbers for the Siyata shareholders could be double what the market is anticipating. Is that correct? Potentially.
Yeah. So just to break it down very simply, and you're right, our valuation, we believe, is well beyond the 160 million. But, in facilitating this transaction, Siyata wanted to allow its shareholders to retain a significant part of SYTA of the public entity. And so we came to an agreement to peg a valuation 160 million, which 10% of that 90-10 split would equate to $16 million of shareholder value that's retained by Siyata shareholders at the time of closing. If you look at where the stock is today, obviously it's greater than 16 million, right? And so that's what I mean when I say that Siyata shareholders could end up owning and controlling more than 10% of the Siyata public entity when the deal is closed.
Yeah. So okay. So there's basically some upside surprises, some catalysts. Again, those are the things that we look for with our next super stocks, right? This is again, for anybody that's new to the platform that's just joining our program, the stocks that we focus on here are stocks, again, which have that 10x upside potential. We're not looking for incremental growth companies. We don't do interviews with CEOs that are companies doing dividends growing at 5% a year. No, we're looking for stocks that have that 10x to 100x. We've had 13 of them in the last few years. Too many doubles, triples. Siyata's already performing exceptional performance so far already. Eitan, I interrupted you as you were about to start talking about what is your vision for the future of the company post merger in terms of you mentioned operations. Like what are your goals here?
Yeah, thanks for the question. I think maybe in a prelude to that should be just so the viewers can understand our business model, and that'll kind of help describe our vision for where we go beyond. The mobile gaming market, as you mentioned, $126 million market. Billion, excuse me. Yes, $126 billion market. Core gaming, we have a number of points where we have competitive advantage. So we have a very strong track record of launching games and monetizing them into market, high level of expertise in the mobile gaming sector, and an extensive level relationships with third parties in the mobile gaming industry, both on the publishing side and on the ad delivery side. So we already have a very strong base that we've been building off of for a number of years, and as a layer on top of that, we've developed proprietary AI gaming tools, which have given us a very unique edge as a technology to continue driving success for us. So we call that our BI platform. And essentially, this is a combination of unique algorithms that we utilize to determine which gaming niche to go into to give us a first mover advantage. Gaming niches, are spaces within the gaming sector that haven't been fully tapped into. It's looking at a number of different factors. We can determine financially where the best return on ad spend is for us in those particular niches. And that gives us that edge, for us to be able to really get a first mover advantage in that particular space. In addition to that, we've also created a number of AI technologies that have given us exceptional efficiency in both developing the games as well as launching them. And then we have a number of tools as well that we deploy that that give us another competitive advantage as it relates to creating content, short form content that helps us market these games. And so collectively, we really see the AI aspect to our business as being a very big growth driver for us and a differentiator. Further to that, we see the next 2 to 5 years, we see exponential growth to the company. That's where we expect things to go, both from our existing business and being able to scale that out, as well as looking at other opportunities through acquisition, growth by way of acquisition. We have a number of companies that we've been looking at that have complementary businesses to ours, short form video content, for example, like the TikToks of the world, which could actually fit very nicely into our BI platform and enable us to utilize that as a launch pad to go into a parallel vertical that has very, very large opportunity and higher margin profiles. So in summary, I think that this is really where we see the growth for Core, is looking at scaling out the current business, looking at acquisition opportunities, and really driving what we expect and hope to be hundreds of millions of dollars in revenue over the next few years.
Okay, so it's interesting. So I know, I've interviewed a lot of CEOs, probably thousands over the years. I know that you're always very conservative. A lot of guys, they say, "Oh, you're very conservative." So everything, you don't want to overhype things. You're giving us kind of real details here. So the reality is basically the success in this mobile gaming space, a lot of it is blocking and tackling. It's kind of this operational, really getting the details right in terms of, the marketing, all these things, turning out the games quickly. Now you mentioned, so you're talking about the M&A part, which I think is something that the market has not absorbed. There's a couple of paths for upside in the stock. Number one is obviously the current operations. You're doing 80 million. It's growing organically, and that's great, right? I think that's where the market is excited. What the market does not know is that, again, you got this M&A pipeline. Now you mentioned last time, you were kind of hinted at this. I think you mentioned this company in the short form entertainment. Is this sort of like a TikTok that you're looking to buy, like a mini version of TikTok, or what kind of companies?
Yeah, I'm utilizing that as an example, of some of the kind of low hanging fruit and opportunities. We have a few conversations ongoing now, none that we can disclose at this point. But again, where we look to add accretive value to the company is in technologies and other companies that are already in similar spaces where we can leverage our technology and platform to be able to accelerate the growth in those businesses. And so any company we're going to look at is going to have significant revenue, significant revenue contribution to our business, as well as have some sort of competitive edge whereby we can take our platform and grow that. short form video content is obviously something that's, rapidly growing. And I think that, the utilization and adoption of that has just accelerated with mobile adoption. And so that's something that we're looking to tap into more and more. Today, we're purely focused on mobile gaming and casual games, but we think that could be a vertical that could be, a very exciting growth opportunity for us.
So, but is the focus really kind of the mobile space? So between anything to do with mobile, is that really the focus? Things that would be, highly synergistic?
Yeah, I mean, everything's really mobile driven. Today is 1.4 billion mobile users, mobile gaming users. That number is expected to grow, I think, exponentially to about 2.4 billion, over the next 4 years. So, or 3 years. So I think that, everything is really mobile first today. And that's where we're seeing most of the growth. I think that really for us, it's about determining where the technology is going. We're seeing, the AI integration and fold into a lot of different sectors. And I think that's only going to continue to grow. We haven't seen it too much in gaming itself, but, that's where we think that we have an edge and we really can carve ourselves out of the competition. And I would say also that, our technology is something that we don't just use for ourselves. So I think there's also an important distinction to make is that, many of the mobile gaming companies out there are really just developing games for their own portfolio. But when we develop technologies, we actually develop technologies and games, not just for ourselves, but also for other gaming developers who we partner with and we co-launch games with. And so that's some of the similarity, to AppLovin in the sense that we have a platform in addition to our gaming portfolio. And, that's something that we continue to be able to utilize our AI technology to further develop.
Okay, so I think we got some questions coming in. I guess they're saying that, so you're going to expand to other apps potentially beyond just games, things that are synergistic where you can use your AI platform. Is that the idea?
I think for the time being, we are gaming focused, but we are also ad tech focused, and so our platform enables us to kind of play at that intersect. Our AI platform, as I mentioned, it gives us the capability not just to produce, content quicker and reduce production time, but also to generate more content, in a more automated way. We also utilize it for user portrait prediction, so we can kind of take a targeted marketing approach and look at what users would actually be interested in similar games to the ones that they're engaged with now. And we also utilize it for ad delivery optimization. So we can kind of look at multidimensional optimization based on real-time metrics that are coming in. And our advertisers actually make adjustments to that in real time so that they can get, the highest ROI on their ad spend. And all this is very metrics and analytics driven. So very similar, I think, to Google in that respect, if you will, what they did with just traditional digital advertising. This is really what we're focused on for gaming.
Okay, let's jump to some audience questions. We got just a couple minutes. Okay, Mohammed is asking about crypto treasury. Every company is doing this crypto treasury stuff. Do you have plans for this? Anything to do with crypto?
Yeah, thanks for the question, Mohammed. It's a very interesting question. We've actually been approached by a number of crypto companies already that have asked us the same question. And I'll never say never. Let's put it that way. I don't think it's an immediate strategic imperative for us to try to tap into the whole crypto treasury buzz and as things are going right now in the industry. But I think if we were to do something like that, of course we're focused on closing the deal with Siyata and getting into the driver's seat. But I will say that once that transaction closes, we are open to exploring additional opportunities that add accretive value to our our stock and the shareholders. And, given that today's world is very much going in the direction of everything digital, digital currency being one of them, that's something that we would certainly be willing to explore.
Yeah, look, I think it's very important. Like, I think you hinted at a couple things. The main thing is, first, the deal has to close. The merger has to close. Then everything else happens after that. Now, look, one thing I know is, one of the things we focus on with our stocks is we're looking for that 100x CEO, right? It's not. It's basically, and I think what investors need to know, and as they'll kind of get to know you better over the next weeks and months, is that, again, we've crossed paths in the past, and I think you're a very ambitious guy. You see this as, you're not going to just, stay with having an $80 million revenue company and growing incremental. I think, and again, you so far you've been keeping it very low key until obviously the closing. My take on it is that I think you have very big plans that for this company, and that you have really tremendous ambitions for building it out and maximizing shareholder value. One thing that I know is you do have a background in creating shareholder value. That's a focus. You understand how to do it. So I think the shareholders are going to be in good hands. Now, with that said, we got people asking. I get people are always. I guess with that merger, people are maybe not clear. They're saying, is there going to be dilution? Or I don't think they understand the merger exactly. So is it dilution or is it accretive? Please clarify.
Yeah, it's accretive. So thank you for the question. And really, it's important for existing shareholders and prospective ones to really understand the structure of the transaction. We've tried to distill it down into its simplest form. But in essence, current Siyata shareholders will be diluted, but they will not be diluted in proportion to the true valuation of core gaming. And that's something that existing Siyata management was very keen on, is making sure that the existing shareholder base retains significant equity in the post-merger entity and is able to realize a lot of the value that's going to be created through this merger. And so ultimately the structure is, I'll just reiterate, it's a 90-10 split, 90% being core gaming ownership and 10% being existing legacy shareholders of Siyata, essentially whoever owns stock today or prior to the merger. And that is at a minimum. So that is really the floor. That ownership percentage can be higher. For example, today, if the transaction were to close today, the ownership percentage would be closer to an 80-20 split, given the existing value of Siyata shareholders' holdings and where the transaction would close. So that is really our vision. Our focus is always on the shareholders and really returning, the most value to them. That's done through initial structuring, but also as a long-term plan, as you mentioned, articulately, Jack. Our focus is really to look for opportunities where we can add shareholder value, and do it in a very big way.
Yeah. So bottom line is, and this is again our thesis of potentially, when I did the video, it's like potentially this could be a $15, $25 stock or even higher. It was based on that initial estimate of having just 10% of core gaming. So if we end up with 20%, which we have not put into the calculations, then the numbers are double basically. Then it becomes potentially a $50 stock. Again, not advice. This is not whatever. I'm just saying potentially based on the comps, based on the valuation multiples. Again, if core gaming doing 80 million, and I guess with Siyata it's 90. Let's just say it's 100 million if you're going to grow incrementally. Add some extra organic revenues, I should say. Let's say you're doing 100 million. It's $1 billion valuation. So right now, technically, we might get as Siyata shareholders closer to 20% of that. So that's 200 million. You divide by, the market cap of Siyata right now, I think is 25, 28, whatever it is, yeah. Right? So there's basically a 10x upside from here if it's that 20% split. Okay, we're wrapping up. Let me see. Do we have any more questions? Okay, hang on a second. Let me see. Okay, no, I think that's it. Eitan, somebody was asking, when will the stock be over $7 again? When the market decides. I don't know. Usually, look, as I was saying before, every one of our stocks that we feature on this platform, that became a 10 bagger that went up 2,000%, 5,000%. Every time they first break out, they go up 500% or a little bit more, even 1,000%. They always pull back like, 50%. The market has to shake people out. And then I don't know why it does that. I'm doing this a long time. I don't know. I don't make the rules. Eitan, have you seen this before? This is the typical path, right?
I reiterate, I've been involved in the public markets for 20 years. I've run multiple public companies, and it's just, beating the same drum. Of course, there's going to be flash in the pan, pops in the stock. There's always going to be traders that are looking to trim their profits, and there's going to be that pullback. But I encourage whoever's really looking at Siyata as a potential investment opportunity to look at the business. The business ultimately is what drives the value. It's like that in the private markets, like that in the public markets. Ultimately, the underlying business and the fundamentals and the growth of that is what's going to determine the long-term value for shareholders, and that's what we're focused on.
Right. I couldn't have said it better. Look, the investment thesis at the end of the day, it's like, as Warren Buffett says, markets will fluctuate, but at the end of the day, the value comes out, right? And again, you got 80 million in revenues, core gaming, multiple opportunities to grow that. You hinted at the M&A pipeline, okay? The M&A pipeline, which I think could be I don't think you're going to mention numbers. I think I tried to get the numbers out of you last time. You didn't want to give us numbers.
Well, we'll have to wait till we close the transaction.
We'll have to wait. We got to keep some things for the upside. But the thing is, I think this company has a lot of upside catalysts that are not understood by the market, which I think is good. It's good not to tell anybody until after the thing closes. That way, it'll be a surprise. Because if everybody knows, it's not going to move. If it's a surprise, if it's an upside surprise, then this thing could really explode. So potentially, again, we're not saying any guarantees or whatever. But okay. Everything is looking good. So thank you everybody for the questions. Thank you everybody for joining. Eitan, thank you again. When are we gonna catch up with you again? Do you have any news, anything expected in the next couple of weeks that we can have you back on?
I think we should stay in close contact, Jack, and let's see how things continue to develop. I'm happy to come on the show anytime and talk further and engage with shareholders and answer any questions. It'd be my pleasure.
Okay, thank you again. Thank you, everybody. We'll see you all on the next one.